Trend is your friend. This is the first sentence I would love to say before starting this video. Hello folks, welcome back to another episode of T2SMC Trader. So today I'm going to explain the price action which you will predict beforehand in Wednesday and Thursday. Trust me, it's too easy. Over here you also don't need the 15-minute chart, you just need the 1-minute chart. But before going into this video, make sure that you have given me thumbs up and you have subscribed to my channel if you are new. Now, in this video, I'm going to give you some gem. Okay, so you have to make sure that you have the pen and the paper with you. Wherever you will need to take the notes, I will repeat that sentence 1 or 2 times. Okay, so I will say like that way. This is the information. I'm gonna repeat it. This is that information. Okay, so when I will repeat something, you will take the information. It's extremely important because I have seen that some of you has done some mistake. So I have decided to make a video that will help you to understand the whole price action in Wednesday and Thursday. So it's enough chit chat at the beginning of this video. Let's go to the video. Over here on my right, this is the 15-minute chart which I am going to extend. Okay, so there is my 15-minute chart. If you see over here to this 15-minute chart, this low and that low, they are relatively equal lows. Now this low and that low, they are also the relatively equal lows. First, I would love to mark that relatively equal lows as my sell side liquidity. So this is my sell side liquidity. Over here, I have this buy side liquidity. This is very clean highs. Also, this is the clean highs. This is the buy side liquidity. First, I'm going to give you an idea how you should expect the price action. Over here, I have marked this new week opening gap. Just don't bother with all of this line because when I'll be in 1-minute chart, it will be clear to all of you. Okay, so right now, don't bother by all of these lines. Here, this is the new week opening gap, and here, this is the new day opening gap. I have this clean sell side liquidity. Below this sell side liquidity, I have this last fair value gap from 15-minute chart. So this is the last fair value gap from 15-minute chart. This is the liquidity below the 15-minute last fair value gap. Now this liquidity is from daily chart. Also, you can see this low and that low. They're relatively equal lows from 15-minute chart as well. So above this relatively equal lows, I have the last fair value gap over here. And above this fair value gap, I have this last fair value gap. So if it has taken that last sell side liquidity, it should reach at least until this last fair value gap. And if it can go through this last fair value gap, it will go toward that sell side liquidity. This is how you will find, you will mark the liquidity and the fair value gap. Right now, above this new week opening gap, I have this little last fair value gap from 15-minute chart. So this is the last fair value gap from 15-minute chart. I have marked that on. Above this last fair value gap, I have another last fair value gap over here. It is also valid. And above this last fair value gap, I have this clean buy side liquidity. So if market would love to go for that buy side liquidity, it has to first break this last fair value gap. If it can break that last fair value gap from 15-minute chart, okay, this is the place I'm going to repeat. This is the place where you will need the 15-minute chart. If you see the market is right now inside a new week opening gap or new day opening gap or last fair value gap, over there you will need the 15-minute chart to see did market break that new week opening gap or maybe this last fair value gap. If it can break, then you will decide that market is going for that buy side liquidity. Then you will go to your 1-minute chart. You will start to look for buy. When market will be here in this last fair value gap, you will come back again to 15-minute chart and you will see if this fair value gap is broken by 15-minute chart or not. If it is broken by 15-minute chart, this buy side liquidity is obvious. Same over here to that specific area. This is the last fair value gap over here. Okay, so look at this last fair value gap to that specific leg above this buy side liquidity. Above this sell side liquidity. So this low and that low, they were relatively equal lows. So above this liquidity, you have only this last fair value gap over there. Now this last fair value gap is inside the new day opening gap. That's why I didn't mark it. But if you want to mark it, you can mark it. But either way, you have to see that from 15-minute chart, if market can close below this new day opening gap, then and only then you will start to think that market is going for this sell side liquidity. So I'm going to repeat this one more time. In Wednesday and Thursday, you will need the 15-minute chart only whenever market will be in last fair value gap or new week opening gap or the new day opening gap. Otherwise, you don't need the 15-minute chart. Okay. So over here, as you can see, market failed to go through this last fair value gap. That means from 15-minute chart, market has failed to break that 15-minute last fair value gap. When it has failed to break that last fair value gap, you will simply think that no, market is not going higher. You will start to look for sell only. Now, when market was inside this new week opening gap, selling is very difficult inside that new week opening gap. Even if you would love to take a sell, you will frame your trade from very near to that new week opening gap. Obviously, that entry should be that fair value gap or whatever you are looking for. That thing should be below or at the level of this new week opening gap. Then you can take a sell until this constant cross met. Maybe you are going to frame a sell setup from there. That sell setup or the fair value gap, maybe the order block, whatever it is, it has to be below this constant encroachment or at the level of this constant encroachment, and you are able to take a sell from there to until this new week opening gap low. If you have the ability to take the partial over here, then and only then you can look for some other liquidity below that new week opening gap. That means you have to take the partial over here, or if you take the sell over there, then you have to take the partial over here. Now, why you are looking for sell? Because market failed to break that last fair value gap from 15-minute chart. That's why you are only looking for sell, not looking for buy. If market could break that 15-minute last fair value gap, then everywhere, I mean, you see this new week opening gap that is also be broken, and also this last fair value gap is broken, you are good to go for buy. When it failed to do that, you will simply think that market is going to fall. Now, there is another gem I am going to add. When the trend is confirmed, then let's say 1, 2, 3, 4, or when market was falling like that way, it was falling, right? It was falling. When the confirmed that market is falling, actually, this is the down trend. You don't need to stay in this 15-minute chart to see that if market can trade that 15-minute fair value gap. So over here, I am going to mark that fair value gap. Later, it will be important. Okay. So this is also a 50-minute fair value gap. You don't need to wait to see that market reach to that fair value gap. You don't need it. All you need from 1-minute chart is from 1-minute chart, did market take some kind of buy side liquidity? Then market has been shifted, fair value gap, boom. Again, buy side liquidity, one market structure, fair value gap, boom. Until a certain level. What is the certain level? From that new week opening gap to until this new day opening gap. This is the certain level. Until the high of the new day opening gap is the certain level. When market has broken this new day opening gap, what is the next certain level? This sell side liquidity is the certain level. Or maybe until this last fair value gap. If you have the time, then you can hold your trade maybe until this last fair value gap from 15-minute chart. Okay. So this is most important part from this area. Now I'm going to go 1-minute chart because now I need 1-minute chart only. In 1-minute chart, when I'm here, you remember this is that 15-minute last fair value gap which market has been failed to break from 15-minute chart, right? So when market failed to break that 15-minute chart, I will start to look for sell. When I'm going to look for sell, how I'm going to take that sell? My sell should be very near to that high. If I am able to take a sell from there, I'm going to take that sell until this constant encroachment. If in between these two levels, maybe the sell setup has created over there around that area, and am I going to take that sell? No, I'm not going to take that sell. I will only, and if market has made a sell setup over the very near 1-2 handle near that new week opening gap, I will take that sell. Okay. Same thing over here, that constant encroachment. If the sell setup created over there, why you are looking for sell? I explained that already. Okay. Don't get confused. Maybe there is a sell setup in between the 50% of that two level. No, you are not going to take that sell. Why? What is the reason for that? You know, this fair value gap is, or the new week opening gap is divided by 4. Just let me remove it and let me mark it by this thing. It is divided by 4 quadrant. Okay, so sorry, two quadrant. Okay, this is the 50% upper quadrant, lower quadrant. Look at the reaction from that lower quadrant. Look at the reaction from that upper quadrant. See the lower quadrant and upper quadrant reaction. That's why you are not allowed to take entry from between the 50% of that level. So high to constant encroachment, the 50%, you are not allowed to take entry from that area. If you would love to keep that quadrant area in your new week opening cap or new day opening cap, it is absolutely good, because you will see the reaction from all of those area lot of time. So you can keep those on your chart. So I'm going to explain this price action now. When market trade that 50-minute last fair value cap and failed break, then market fall. Okay, when it is falling, I'm not going to take the entry. Now here I have the first entry. Where is the first entry? After 9:30, after 9:30, I'm allowed to take the entry. This is the whole price action that was very messy and market wasn't sure where it will go. Then finally market closed below this constant crossment from 50-minute chart. It went higher again. Take that high. See, this high has been taken over there. Then market fall. High, low, high, high. This is the lowest down close body close candle. This is going to be your breaker block. So I'm going to mark that breaker block around that area. So this is going to be my breaker block. I'm just going to mark it like that way. So this is the breaker block. Now you can say, brother, why you are looking for breaker block here, not there? Now let me come to the point. When market has taken the liquidity, maybe there was some kind of market structure shift around that area, anywhere, okay? Then market has been traded some kind of fair value cap, market fall. There was some kind of fair value cap that should be unfilled. But later market went higher, filled that unfilled area. I can look for the breaker block over there. When this candle appeared, look at this candle, closed below this low, it is valid for being a breaker block. Now, am I allowed to take entry from there? It is too far already, right? From there, now your range is this upper quadrant too high, okay? This is your range. Where the setup has created exactly to the middle of this range. Am I going to take that entry? No, I'm not going to take that entry. Though this is a breaker block, I'm not gonna push my button over there. Instead, I'm going to wait for the normal price action. Now, what I have told you at the beginning of this stream from 1 minute chart, you will wait to see that market has taken some buy side liquidity, market structure hit, fair value gap, boom. This is the setup you should look for from 1 minute chart. All you need, I am going to repeat it again. All you need is just 1 minute chart in Wednesday and Thursday. Now you can see market finally fall until this constant crossment. Then it has been rejected. It went higher a little bit, took that relatively equal highs. I'm going to remove this quadrant area. Okay, I don't need that actually. So when it has taken that relatively equal highs, then it has given me the displacement. Look at this displacement, how beautiful that displacement is. Okay, a very nice displacement, a very nice market structure shift. This is your entry fair value gap. Where is your breakaway gap? There is your breakaway gap. Let me just mark the breakaway gap over there. Brother, I am going to give you lot of gem by this video. Okay, just keep waiting for that, all of those gems. It will make you the wizard, trust me, brother. So this is the breakaway gap. You will frame your setup. You will take your entry over there. Did it created at the level of this constant encroachment? Yes, brother. It has created at the level of this constant encroachment. Am I going to take that sell? Am I allowed to take that sell? Absolutely. Now, if you take that sell, where should be your target? Look, this low and that low. What is that? Relatively equal lows. Aren't they so plain? Absolutely. You can take a partial over here and you can hold your trade until this low of this new week opening gap. So this is the new week opening gap high, constant encroachment, and the low. So you can hold your trade until that area. If you are overzealous, you can see this is also the relatively equal lows, very clean lows over here. Okay, this is from 1 minute chart. You can hold your trade until that area. I am not going to support that. In my opinion, you should push your button over there if that is the immediate reaction, obviously, and you should cover the breakaway gap. So just the breakaway gap, you are going to cover the breakaway gap. Where is your target? The new week opening gap low. So that 59 handle, obviously you have to take a partial to that area. You have to take the partial. There is no other way. Then this is going to be your first trade. Now market didn't trade until this breakaway gap. I'm not interested to say that. Please put your stop loss over there. I trade like that way. I trade like that way, but I'm not influencing you to do that. If I see the stop loss is too big, I put my stop loss with around that area, and you should you should cover that breakaway gap. This is your first trade from today. Now here, this is the fair value gap. Where is 930? This is your 930. Exactly, this is your 930. After 930, the first fair value gap. Always mark that fair value gap because this fair value gap is going to be respected lot of time. Okay, look over here. It tapped, use that as a support, support, support. Then it went through that. Use that as a resistance. Yeah, went little above that fair value gap. This is the fake breakout. Went lower, come back again, use it as a resistance, went lower, went through that, come back again, use as a support, resistance, fall, used as a resistance, the high of that fair value gap. Look, it has been used as a resistance. Look at the bodies, how beautifully the bodies has been closed inside that fair value gap. What is the importance of that fair value gap? Now, you maybe didn't mark that fair value gap. You don't have that fair value gap. Either way, you are looking for that sell from there because you know how to trade in Wednesday that I show, right? Market fall, then my buy side liquidity, take that buy side liquidity, fall, market structure, hit, fair value gap, boom. If you have that fair value gap marked over there, that is going to give you more confidence to take that sell. That means you are also getting this fair value gap as your reference that is going to hold the price and market is going to fall. So this is how I'm going to repeat. The first fair value gap after 930 is going to be built. It can be a bullish fair value gap. It can be a bearish fair value gap. I don't care. But the most obvious fair value gap after 930, mark it and extend it to your right because you are going to see that lot of time market is going to use this one. That doesn't mean whenever it will come to this fair value gap you are going to take buy or sell. No, you will actually use this fair value gap for a reference, as I'm using this fair value gap over here as a resistance reference. Okay, so I repeat, the 930 fair value gap, after 930 the fair value gap, you will use that as a reference for building your more confidence. So finally, market tapped to that fair value gap, took that sell side liquidity, came here. Brother, I'm going to give you the inversion fair value gap gem over here. Trust me. Also the market history. Everything is going to be clear by this video. Then market fall dramatically, then came here. Remember this sell side liquidity, relatively equal lows, that has been taken over as well. Then market reached until that area. Okay, so around that area. Where market reach until that area, where is your last fair value gap? This is the last fair value gap, and you know that market is actually falling. Why? Because of this sell side liquidity and also this maybe until this new opening gap. Why you are thinking that market is going to keep falling? Because today trend is your friend. Already the trend is confirmed that market is going to fall. It is not going to reverse now. So you are not looking for buy setup. The trend is confirmed. You will keep looking for sell. Whenever you will look for sell, you will just wait to see if market can take the buy side liquidity and then it can make the sell setup or not. Okay, now as you can see, finally market went lower, then market started to go higher. When it is going to fall in that area, are you going to take the entry? No, you are not going to take that entry. Why? Because you are now waiting to look for some kind of market structure and liquidity taken. When market fall dramatically over here, then look, market went little higher, make a swing high, take that swing high, give you the market structure shift. There was your another market structure shift here. This is your another market structure shift over there. Let me show. And market has taken that buy side liquidity. Swing high, brother. Why swing high? Because swing high, every swing high, when you are looking it as liquidity taken, you can simply use one swing high. But if you target, then you have to look for relatively equal highs or relatively equal lows. So for TP, that means target profit, you have to mark relatively equal lows. This low, that all of these lows, they are relatively equal lows. Market didn't take. Yet market didn't take. Then market fall, right? But market didn't take it. It reached until that area, went higher, take that buy side liquidity, give you the market structure shift. When you have got the market structure shift, do you have any fair value gap over there? Maybe you don't have any fair value gap. You didn't get any opportunity to take sell over there. Then market fall and take that sell side liquidity. Here, I'm going to add another gem. What is that gem? This setup is inside that setup. This is a 22 YT model. Until this obvious liquidity, market failed to take that obvious liquidity, market went higher again, made another 22 YT model. Here, in this type of situation, you can't wait to see that market will trade even if there is a fair value gap. Even if there is a fair value gap, you won't wait to see market will reach until that fair value gap, then it will fall. No, it is not going to give you that opportunity. Instead, it will keep falling. So I'm going to repeat. If you see a setup inside another setup where there is some kind of obvious liquidity that you know market is going to take, you are not going to wait for fair value cap trade. Instead, whenever you will get the market structure shift, you are already in the market. So I repeated it. This is another gem. If you have understand this one, I'm very happy. If you don't have, then ask me let me know to the comment box. Okay. So if there is another setup inside another 22 YT model, next time you don't think that market is going to give you another opportunity to trade the fair value gap. If there is any fair value gap, okay, even if there is a fair value gap, you don't think that market is going to trade that fair value gap. No, you don't think like that way. If there is a fair value gap, just cover that fair value gap by your stop loss. If you don't have the fair value gap, then just simply put the stop loss anywhere you want. For example, over here you have this new week opening gap. See, just cover that new week opening gap high. I mean that new week opening gap from your by your stop loss. So here your entry should be there when you got the market structure shift, just one tick below that low. One tick below that low. Cover that new week opening gap, maybe new week opening gap low. What should be your target? There. This sell side liquidity. That should be your target. This is your another opportunity to take sell. 35 handle. Not bad. Then finally market reached until that area, market started to go higher. Are you looking for buy? No. Why? Because you know today's trending day, trend is my friend. So what you should think, every single time market is going higher, it is actually going to take the liquidity. First, it went above that high. Look over here. It has taken that high. You will start to look for a market structure shift. Was there any market structure shift? No. Then market went above those highs. Did it take the market, I mean, liquidity? Yes. Did you give the market structure shift? No. Is it valid? No. Finally, market has taken that high, right? This high has been taken. Then market fall little bit. This is swing low, which is valid for shifting market structure. Why this low is valid for shifting market structure? Because this low is here. Now, here is a problem. It didn't tap to this area. You can see it failed to trade that fair value gap just for one tick. So you can be confused by that swing low. Is that valid swing low for shifting market structure or not? Okay, you can be confused. If you are confused, if you think that no, I'm not going to use that swing low for my market structure shift, there is nothing wrong. To be honest, there is nothing wrong. This swing low, is that valid? Absolutely. You can think like that way. Just look for swing low or something that then fair value gap. Did it trade that or not? But here, this swing low I'm going to use. Now, how do I know this swing low is going to be my market structure shift? When market came here to that, made this low and went higher, gave me another market structure shift over here. This is the market structure shift. Why this is the market structure shift? Because the fair value gap is actually from there to there. Look at this candle. There is a small volume balance. So here, this is the fair value gap. This swing low has traded that fair value gap. Also, this swing low also has traded that fair value gap. You don't need to force the market if you don't understand the premises behind this. No need to push, force the market. Please don't do that. Don't just do that, because I am going to show you more beautiful setup that you will be able to take. Okay, so don't force the market. You will have lot of opportunity to take entry. When I got that market structure shift over here to that specific candle, exactly to that candle, I'm going to take my sell from there. Now, is this a displacement? Here is a confusion. Is that a displacement? Now, in my opinion, this is not displacement. I told you that I'm going to push my button over there. No, I'm not going to do that, because this is not the displacement. In a small eyes, it was looking like displacement when I stressed the chart. Okay, when I did that, it was look like a displacement. But if you put your chart like the single way, does it look like a displacement, brother? Tell me, does it look like a displacement? Absolutely not. So that is the reason I'm not going to push my button over there. Then why did you tell that you are going to push the button? Scary. Whatever. Then market has made this swing low and it has been shifted over here. So I'm going to mark that market structure shift around that area. So this specific candle has shifted the market over there. Look, just little below. Okay. Now over here, I have the displacement. At the same time, I can see that market has been traded the low of this new week opening gap. Over here, it has been traded that new week opening gap, shifted the market. I will look for a fair value gap. Do I have any fair value gap over there around that area? I have a very small fair value gap around that area. Okay, so this is the fair value gap. Am I going to take that sell, or am I going to push my button after shifting the market structure, because this setup is inside that setup? There is a thing you have to understand, brother. When this setup has created inside that most beautiful setup, or the real 22 IT model, this is the inside setup, not that one. I repeat, when there is a setup inside another setup, it's done. So you can't think this one is inside this setup. So you are not able to I mean what is that? You can't just recommend that setup for being an inside setup here. You can't do that, because this is also an inside setup of this beautiful or perfect 22 IT model. So it's done. You have to wait for another perfect 22 IT model create. If you get that, then you will be able to frame your setup or the inside setup. Okay, I repeat that again. Now you can have a question, why this high and that high, they are the relatively equal highs? Why you are not thinking that market is going to take that relatively equal highs before falling? Why you are not going to think that? Here is the part where I am going to give you another gem. You know that market is falling. This is another gem, okay? Write it down in your notebook. You know market is going to fall. This is a swing high which has taken all of this liquidity. So I am going to mark that swing high constant encroachment. This is important for me. That 50% of that week. Why that week? Because this week has taken all of this buy side liquidity, traded that fair value gap. I would love to see that market will fail to reach until that constant encroachment. It will fail to reach until that area. After failing to reach to that area, then if market give me a market structure shift, I am going to believe that setup, that market is actually going to fall again. If you are thinking market is going to fall, okay, in this type of situation, this week 50% is important. Now, when market trade that constant encroachment, what you are going to think? Market is now not going to fall. Obviously, I will see if the body can close at the level of this constant encroachment or below the constant encroachment. At the same time, market can't take that high. Market can't take that high. If I would love to refer that constant encroachment of that week, market can't close or go above that high. Not even the week. We can't go above that high. If it went above that high, I'm not going to use that week 50% for giving me the confidence for that sell setup. Okay. Either way, that was another setup. Over there, market structure shift. This is the fair value gap. So over here, you are not going to push your button after the shifting market structure. You will wait to price reach to that fair value gap immediately. So here, you are going to take your sell. What should be your stop loss? The candle has make the fair value gap. This is the candle which has made the fair value gap. And you can see it is very near to that new week opening gap. Just put little above the new week opening gap, because it can come back again to trade that new week opening gap. Okay, it's up to you where you will put your stop loss. Now, where is going to be your target profit? Because market has taken that sell side liquidity, right? This sell side liquidity from 1 minute chart, it has been taken. So where you are going to think that market is reaching for? I'm going to remove this sell side liquidity because it will be a lot of light. From 1 minute chart, first look if there is any relatively equal lows. Look, this low, those lows, those are relatively equal lows. Mark that as your sell side liquidity. So from this one, that one, they are relatively equal lows. Mark them as your sell side liquidity. Target them over here. If you don't want to target them, then look exactly below here where is your last fair value gap from 1 minute chart. So this is my last fair value gap from 1 minute chart. Okay, market failed to trade that last fair value gap. There is no other fair value gap above this fair value gap. Look, no other fair value gap above that fair value gap. You can simply hold your trade until the last fair value gap. Make sure that you have taken some kind of partial. Now, where you are going to take the partial? If there is some kind of relatively equal lows from 1 minute chart, or maybe some kind of obvious swing low, you can take the partial over there. Or if you see there is an entry fair value gap, you have to take the partial. I repeat, you have to take the partial. You can't just hold your trade until that 99 handle over there. You can't just hold that trade for that that long. Okay, you can't do that. This is obvious and this is extremely important. Now here is a part. Are you going to take that entry? This entry, are you going to take that entry? No. Why? Because this entry is inside the lunch hour. Look at the time, 12:41. Are you going to take that entry inside the lunch hour? No, you are not going to take that entry. Around the lunch hour, no entry is valid. I repeat, around the lunch hour, that is from 12:10 to 12:50. No entry is valid. You can't push your button in that time frame. Either way, I'm just going to mark every single setup so that it is going to be insightful for you. Brother, why you are keep looking for sell? I explained that at the beginning of this video. Okay, so please watch that beginning and then you will understand why I'm keep looking for sell. Now, around that area, in my opinion, the the lunch hour start actually from 12:50. But if you are not don't understand how to use the macro, then for you, you should push your button at the, if you have the chance to push your button at 1, you are good to go. Before 1, please don't push your button. It's my request. Okay. So market fall until that area. Do I need 15 minutes chart? No, I don't need 15 minutes chart because this is the trend. I know trend is my friend and I know how far I can keep using the 1 minute chart when I should go back to 15 minutes chart. I explained that at the beginning of this video. Brother, still I have a lot to give you about the inversion fair value gap. Just let me explain everything over there, then I will go to that inversion fair value gap. Okay, just give me little time. Then around 1 p.m. so around 12:50, market actually went higher again one more time, took that relatively equal highs from 1 minute chart. This high and that high, they're relatively equal highs. No brother, they're sideways candle. You can't use that as your relatively equal highs. I can do that. I just can do that because it is inside the macro. If you're confused about that, please watch my macro folder. I keep referring them in every videos in the screen, the macro. Okay, so please watch that on. It will help you to, when you are allowed to use those type of sideways candle as your buy side liquidity or your sell side liquidity, if and only if it is inside the macro, then you are allowed to use the sideways candle as your relatively equal highs. Otherwise, this is not the relatively equal highs. So as you can see, market has taken that relatively equal highs. I repeat, as it is inside the macro, I can use them. If you don't understand macro properly, please don't go for that. Okay, it's a suggestion or advice for you. So market has taken that buy side liquidity around that area, then market fall gave me the market structure shift over here. This is the market structure shift around that area. Okay, so let me mark it, the market structure shift. Now brother, you told that inside setup, so this is a perfect market structure shift or perfect setup. So obviously this is the setup inside that setup. No brother, it's not the inside setup. Why? Because this time market reached until some specific level, it has taken the sell side liquidity. The sell side liquidity, if there is any sell side liquidity, or it has reached until this last fair value from 1 minute chart. Okay, so some kind of liquidity has taken, and this setup has created to that specific swing low. Look, this is the low. It didn't create around that area. Inside that range, this is the range. Over here, just let me show you here. This setup has created into that range, to that specific range. See, it went higher, then created inside the range. If this candle could go higher, maybe around that area, the setup has created here. I would say this is the inside setup because I have this perfect 22 YT model over there. As market, what is that actually? Oh, okay. So that was the, this thing. Okay. Then the real setup has created below this range. So this is the real range. This has been created. This market structure shift. Look over here, where the market structure shift has created below that low. So, right? This low, when it has been shifted, I got the market structure shift. But if you look over here, where you got the market structure shift inside that range. Okay. So I hope that it is insightful for you, for your understanding. When I got the market structure shift, I just can't push my button over there because it's not the inside setup. I have to wait for the fair value gap. Do I have the fair value gap over there, brother? Yes, you have. Do you get the immediate reaction? That means three candle. One, two, three. The number three candle has traded that fair value gap. Are you going to take that sell? Absolutely. There is nothing wrong. I can simply push my button over there. Where is your stop loss is going to be? Above the candle which has made that fair value gap. You are telling that right now? No, I keep telling that. If you are not good enough, then put it above that swing high. I'm good to put my stop loss just above that swing, that high which has made this fair value gap. If I get stopped out over here, I'll take re-entry. Nothing wrong with that. I'll just take re-entry. Now, where is going to be your target profit? See this low, that low, they are relatively equal lows. I'm going to mark that relatively equal lows over there. Around that area, this is going to be my relatively equal lows. If you don't want to mark these two low, this is, I refer this to low. You can mark these two low as well. I mean, it's up to you where you would love to target. You know that this is falling. And now how far it will fall? You don't know, okay? If you don't know, oh sorry, I just marked that on my mistake actually. That was not the low. Was that the low? Yeah, that was the low. I was right. I wasn't wrong. So yeah, until this low I will keep holding my sorry, I will keep holding my trade. Now this is the 15-minute bearish fair value gap. Remember I told that I don't need that 15-minute bearish fair value gap. I just marked it, but I don't need that 15-minute bearish fair value gap. I will talk about that as well. So that was another opportunity to take sell. Is that inside the session? Absolutely, it is inside the session. Look, where did you push your button? Around 106. So you are already inside the session. Everything is in line. You pushed your button. If you think that it's not, it didn't take the buy side liquidity, don't take that entry. Still, don't take that entry. There is nothing wrong. I will show you more beautiful setup. Now, this is the setup I outlined in my Twitter in live, okay, in my Twitter, even before it has been created. When I saw this specific candle, to that extent, go to my Twitter. If I tell you the live, just go to my Twitter and watch. I told, sell is coming. The sell setup is coming. When this setup, this candle has created over there, I tweeted, sell is coming. Okay, the next sell is coming. Over here, I have this bearish fair value gap from 15 minutes and I don't need that one. If it has been traded that bearish fair value gap, there is nothing wrong. It is more insightful in my opinion, but I don't need that bearish fair value gap, okay, from 15 minutes. All I am seeing that when market has been falling, finally market came until that area. What do I have over there? Relatively equal lows from 1 minute chart, just above the new day opening gap. This is relatively equal lows. So when market came until that area, didn't take that sell side liquidity. Am I going to take sell from there around that area? No. Why? Because market didn't take any kind of buy side liquidity. You will always, after a run, you will always to wait to see if there is a market, buy side liquidity taken and market structure shift or not. Okay. So when market fall, then started to go higher. Where is your first swing high? This is your first swing high, which is your liquidity. So I'm going to remove that sell side liquidity as it has done already. So this is the first time when market has taken the liquidity. After taking the liquidity, do you get the market structure shift over there? No, you didn't. So are you going to take the sell from that fair value gap? No, you are not going to do that. Then market went little lower, went higher, lower little, went higher again. Take that relatively equal highs. So this high, that high, all of them are relatively equal highs. Market has taken that liquidity. What should you look for? Lower market structure shift. Did you get it? Yes, I got it. Where is your fair value gap? There is a fair value gap. Is that immediate reaction? 1, 2, 3. Number 3 candle has been traded. So are you going to take that entry? Absolutely, man. What is going to stop me? It is going to work where you are going to put a stop loss just above the candle which has made this fair value gap. Over there, I'm going to put my stop loss. Where is going to be your target? Here. This sell side liquidity is going to be your target. Make sure that you have taken a partial, maybe below that low or the rejection block, whatever you want. Make sure that you have taken the partial because it's near about 61 handle. I don't prefer that long run without the partial. I don't prefer. Okay. So there is another entry. Now, maybe you didn't take that entry. Maybe you didn't take that entry because it was in lunch hour. You didn't take that entry because in your opinion that is not the liquidity taken. Maybe you didn't take that entry because market didn't make the fair value gap. What is wrong with that setup, man? Market has taken the buy side liquidity, give you the perfect market structure shift, make that fair value gap at the level of this constant cosment. What is wrong to take that sell? There is nothing wrong. How many handle? 59 handle. Then What is wrong with this setup, man? Market has taken the buy side liquidity. You have any confusion? No. Relatively equalized, not even a single high. Relatively equalized has taken a very nice displacement. Look over here. Very nice market structure shift, fair value gap, immediate reaction. You have this obvious sell side liquidity. Why you are not going to push your button? 61 handle just took 2 entry. You are not looking for buy because trend is your friend. You know, your wizard brother has told you that trend is your friend. Market fall again. Now, here is another part you have to understand. Okay, now market is inside this new day opening gap. Obviously, you are not going to trade over here. You will go back to your 15-minute chart and you will wait until this new day opening gap is broken from 15-minute chart. So you can see this is the candle which has broken the new day opening gap actually. So I in my opinion, this is that candle on my left. Okay, this is the candle which has actually from 15-minute chart which has confirmed that this new day opening gap is broken. Maybe then and only then you can look for sell. When market is here, I would love to repeat this information again. Okay, every single day from around, okay, it's not exactly that time, it will be around 240, or it will start from 2:35 to 2:45 p.m. okay, Newark local time, every single day. If you're seeing that market is falling, it's a big fall, it is falling, or market is going higher, vice versa. Okay, it is going higher from 2:35 or 2:45, you will start to think that this is the time market will reverse. That means if you have any opportunity to take buy, you will go for that buy. If you don't have the opportunity to take buy, don't look for sell until it prove you wrong. That means, no man, I'm not reversing actually, I will keep falling. This type of fall actually keep happening in Wednesday and Thursday. I am repeating again this information. I am repeating, okay? Every single day, whenever you will see a big fall, all the day you saw the fall, or maybe it was going higher all the day, you will simply think that from 2:35, specifically from 2:35 or from 2:45, market will go to the opposite direction. As it was falling, then it will start to reverse and it will go higher now. How far it will go, nobody knows that. You are not going to look for sell until it proves you wrong that no, I'm not going to reverse. It is not going to reverse very rarely, only in Wednesday and Thursday. This is the part. Please rewatch this, rewind this part again and again, and then listen this thing. Make sure that you understand this part. This type of no reversing, instead continuation of the expansion actually happen only Wednesday and Thursday. Rest of the day, if you ever see this type of big fall, you will start to think that no, market is not going to fall anymore. It is now going to reverse. If you get any kind of buy setup, you know how to use the higher time frame or everything, then you will start to look for buy. In Wednesday and Thursday, you will think like that way first. That no, market is not going to fall anymore because it is already 2:35. So this is that 2:35. What is it? Here. This is that 2:35. So from that area, you will stop to look for sell. Some of you, I saw that you took sell from there. How can you take the sell from there, brother? You can't look for sell from there because this is the new day opening gap high. You are framing your trade which is actually against your bias. This is the strongest level. All of these three level, also the upper quadrant and lower quadrant, they're all strong level. Don't try to trade inside the gap, new day opening gap or the new week opening gap. Don't try to trade. If you'd love to trade, if you'd love to take a sell, try to take the sell below the new day opening gap and obviously very near from that high to until constant crossman. If you would love to take a sell, obviously try to take the sell from the very near to that constant crossman or below the constant crossman until the new day opening gap low. I would love to say over here, the guys, I saw that you mark this one as your market structure shift because market went higher. Take the buy side liquidity, that was the market structure shift. This is the fair value gap, right? Now this fair value gap, how can you take the sell from there? You can't do that because this is at the, see, look at this fair value gap. This is the fair value gap which is around that new day opening gap. Not, how can you make sure that it is going to work, man? You can take the sell from below this constant crossman, that is also logical, but from there, oh man, it's not good. Okay, please don't do that. And don't take sell until it is not broken from 15-minute chart. Wait, just wait, because you are going to get another opportunity. Trust me, brother, you will get another opportunity. No entry is valid after 345. No entry is valid after 345. So over there, no entry is valid. So I am not going to explain any other price action, whatever happened over here. And finally, you can see it has taken that sell side liquidity, whatever it has done over there. I'm not going to explain all of them. Instead, I would love to talk about the inversion fair value gap now. Now, in ICT's 2024 mentorship, ICT has shown us some way, good way to predict the inversion fair value gap. I'm now going to give you the inversion fair value gap gem over here. Now, here, this is the first time I will keep showing you the inversion fair value gap. It will trade it or not, you will decide that. Okay, I'm going to ignore this small price action because it didn't take the liquidity. This is the first time when market has taken the liquidity, but there was no bullish fair value gap. When market will take the buy side liquidity, you will look for the bullish fair value gap that will use as a inversion bearish fair value gap. This is the last time when market has taken the buy side liquidity. Then this high failed to take that high, right? So it wasn't the liquidity run. This high failed to take that high. It failed to take that buy side liquidity. So I have no opportunity to look for inversion fair value gap over here. Then finally market make another high. It has taken that high. This was the liquidity run for the first time where I have the the bullish fair value gap, right? Now over here, which bullish fair value gap you are going to mark? You have two bullish fair value gap. The first one here, you have another bullish fair value gap there. Okay, this is your another bullish fair. Which one is going to be your inversion fair value gap? Now, I don't mark those type of small bullish fair value gap, small fair value gap. If I just keep it like that, this is the very small one. It is more obvious. If it was a little bigger than that, maybe I would be able to use that one. Why I am going to mark the bullish fair value gap? Because this high has taken that high. Liquidity run. That was the liquidity run. Also this bullish, 15-minute, I'm just not going to talk about why it is going to fall. You have to know that market is going to fall. Why it is going to fall, it's up to you, brother. Okay, if you know it is going to fall, then and only then you can look for that inversion fair value gap. Or maybe market is going higher. In that type of situation, you will take the inversion fair value gap, right? Now why it is going to fall, I have already explained this whole video was all about that. Okay, so here maybe in this, if I see this type of a small bullish fair value gap, what I actually do, I use the bigger one. This is the bigger one as my inversion fair value gap. I will say this is the candle which has validated this bullish fair value gap as an inversion fair value gap. The very next candle, it has traded that bullish fair value gap. I will take my entry to that inversion fair value gap, and I'm just going to cover the upper small. See, this is small inversion fair value gap. I'm going to cover that one. Okay, I'm not going to push my button over there, to be honest, because that is very small. I don't count them as well. Where is going to be your target? It can be anywhere. I'm just going to put it randomly over there because now I'm going to show you the inversion fair value gap only. Okay, now next time market went higher again, this is the liquidity run. Okay, over there, this is the liquidity run. When you got the liquidity run, where is your bullish fair value gap? Mark the bullish fair value gap, the highest one. This is your bullish fair value gap. Okay, this candle has closed below this bullish fair value gap. What is that? Inversion fair value gap. Why this is going to be your inversion fair value gap? Cover that candle high, just that candle high. Okay, and target anywhere you want. I don't care, you just target anywhere. I will show you about something that history repeats. Don't worry, brother, I will show you the history repeats as well. Okay, so let me remove this thing as well because I would love to keep only the inversion fair value gap. Okay, only the liquidity and the inversion fair value gap. So market has taken that liquidity, and I know guys this is going to be little bigger video, but as I have to give you all the information by one video, I have to show you this. I have to show you this, okay? And I have to make this a little bigger. I'm extremely sorry. So this is the first time market has taken the liquidity. This is the highest fair value gap. This is your inversion fair value gap. You took that, and maybe until any kind of sell side liquidity, I don't know where you'll target. That is not my intention to show you that. Then market went higher again. It went higher again, okay? It has taken that liquidity. I'm going to mark the bullish fair value gap. So over here, this is that bullish fair value gap. Around that, sorry, Control Z. But brother, it has taken the high as well. Where is your high, brother? Can you show me the high or relatively equal highs? No, you can't show me that. Okay, if you can't show me that, how can you tell that this is your liquidity taken? This is the candle which has taken that liquidity. Okay, this is the candle. Mark the bullish fair value gap around that area. I don't mark those type of small fair value gap, but it's up to you. This is the candle which has validated that bullish fair value gap as a inversion fair value gap. Take the entry over there. Put your stop loss just above that candle which has actually made validate that inversion fair value gap, and target anywhere you want. Okay, anywhere. Then market has taken this high, bullish fair value gap? No. Taken that high, bullish fair value gap? Yes. But is there any candle that has closed below this bullish fair value gap? No. So you don't have any opportunity to look for bullish fair value, I mean inversion fair value gap. Market went higher, take that buy side liquidity one more time, right? Do you have the bullish fair value gap? You have only this bullish fair value gap. Look, this bullish fair value gap now. You have only this bullish fair value gap. So I'm going to mark that bullish fair value gap as well. Then market fall, little bit it has been fallen, and then finally this candle has validated that bullish fair value gap. Did it close below this one? Actually I can show it the other way. This candle closing, right? Open, close is 18352, and this candle high, this candle's high is 18352. No, it didn't close below this inversion fair value, so I guess you didn't get any opportunity to take that entry. That was not your or to say, I mean, that was not your inversion fair value gap. You missed that one, because this candle, if it could close one tick, just one tick below that fair value gap, then it could be your bullish, I mean inversion fair value gap. As it failed to close below this fair value gap, bullish fair value gap, it's not gonna be your inversion fair value gap. Okay, then market fall again here until that area, then market went higher, take that buy side liquidity. Where is your bullish fair value gap? Let me mark that bullish fair value gap. This is the bullish fair value gap around that area. So here, this candle has validated the bullish fair value gap as your inversion fair value gap. Okay, as your inversion fair value gap. So what you are going to do, you are going to take the sell from that candle, that specific candle, when it has tapped to this fair value gap. Where is going to be your stop loss? That candle has validated that bullish fair value gap as an inversion fair value, just above that candle. Okay, and put your target wherever you want to put. Okay, just let me show you all the inversion fair value gap. Then, and let me remove this one. I will just close my video by showing you history repeats things. Okay, then market went higher again one more time. Do you have any bullish fair value gap around that area? No, you don't have. You have here. This is the bullish fair value gap around that area. Here, this one. Now, this candle has closed below this bullish fair value gap. Then it come back again to this inversion fair value gap. Though it went little lower, but as you can see, I mean, if you didn't take the partial or anything, you will get stopped out over here. So let me actually remove all of this thing. I don't need those. Anything over here. And this is also not important, as it is done. So this is the liquidity run. This liquidity run over there. Here, this is the fair value gap where you will get stopped out. Okay, after taking that. Why I'm marking that, I will tell you. Okay, now look, where market has taken that buy side liquidity, Where is your fair value gap? Is that below that liquidity taken? Every single where it has taken the liquidity, the bullish fair value gap is below the liquidity level. Okay, when it has taken that liquidity, this is the bullish fair value gap, which is below that level. Taken the liquidity, the fair value gap is below the liquidity, vice versa. Okay, you have to think vice versa for the inversion. This is the inversion bearish fair value gap. You have to think inversion bullish fair value gap, vice versa. Liquidity taken below this liquidity level. What happened over here? Liquidity taken, but your inversion fair value gap is above the liquidity level. Are you going to use that on as your inversion fair value gap? It's up to you, brother. I am just showing you everything. So it's up to you. Are you going to use that one as your inversion fair value gap or not? So here you don't have the inversion fair value gap yet. Market went lower again. Take the liquidity one more time. When it has taken the liquidity, you will start to look for your bullish fair value gap. Where is your bullish fair value gap? Now, in this type of situation, here you will have this bullish fair value gap around that area. This candle has made that bullish fair value gap valid over there, but as you can see, market never reached until this inversion fair value gap, so you don't have any opportunity to take sell from that inversion fair value gap. This is not liquidity taken, so I'm going to remove this. So in that inversion fair value gap, you are not able to take that entry. Then I would love to come here one more time to show you the setup over there, and if you can see it or not, I don't know, but I'll just would love to show you that. Then market went higher over there. This is the high which has been taken, right? This is the taken high. Market went too far. Then this is the first bullish fair value gap around that area here. This is the candle which has made that bullish fair value gap valid as an inversion fair value gap. Now, what I told you about this type of small fair value gap, if I just put my chart like this way, can you see this bullish fair value gap? I can't see. I just can't see. And that is extremely small. So I actually don't like those type of very small bullish fair value gap. Instead, I love something like this type of bullish fair value gap. See this bullish fair value gap? Very obvious. Now, are you going to mark that bullish fair value gap because this is the highest fair value gap, but it is above the liquidity. This is your liquidity level, right? It is above the liquidity. Are you going to use that one as your sell? No. Then market fall again, make another high. It has taken that high. This high, okay? It has taken that high. Do you have the, bullish fair value gap around that area? You have this bullish fair value gap. Is it very near to that high? Absolutely, it is very near to that high. Are you going to take that entry? It's up to you. I don't think so. It's a good idea to take the entry. Then finally, market went higher, and this is actually a very nice liquidity run. It has taken almost every kind of liquidity has been taken over there. This is the highest up close body close candle. This is the highest fair value gap, which is actually your inversion bullish fair value gap around that area. Maybe you will be stopped out over here, but you will be able to frame another sell setup from that inversion fair value gap. Maybe one time you will get stopped out over here, but if you believe that inversion fair value gap, you will be able to take lot of entries from that inversion fair value, maybe over there, and just put your stop loss which candle has validated your this one validated. In that type of opportunity, I think you should put somewhere here. Where you will put a stop loss, it's up to you, brother. I am not going to talk about this one because here not even a single candle I can say that has made that inversion fair value gap has validated the way I have explained over here, because one candle has validated the inversion fair value. This candle has validated this inversion fair value gap, but here lot of candles over there, and still this is inside the new day opening gap. You will keep looking for the reaction or something like that. So maybe you will be able to frame any kind of setup over there. Maybe you won't be able, but it's up to you. That was all about today's video. I would love to show you just one thing over here that is called the history repeats, and that is, if you look at this inversion fair value gap in rules, that is the inversion fair value gap, this candle failed to trade that inversion fair value gap just for a little, very little, okay? Over here, you can see the same thing. It failed to trade that fair value gap very little, just for one tick or two tick it failed. That means history is repeating. Then this time market has traded that inversion fair value gap. Then market actually worked. It has started to work perfectly, because here you got the perfection again. But this time over here it failed to trade that inversion fair value gap, which is actually in rules, which is the real fair value gap, inversion fair value gap. It has been repeated over there. When market is okay with the precision, it started to react the way it should react, the inversion fair value gap. Okay. So if there is any other reaction, whatever it is. So that was all for this video. I know guys, it's a long video. I'm extremely sorry for that, but I wanted to give you all the information over here by this one video. If you think it is insightful, don't let me know about your thinking to the comment box. Don't forget to write down boom. So until the next video, cheers.